So we have with us again AJ the ghost. Yes, we have AJ, who's, for reasons that he doesn't even want to discuss the reasons, doesn't like to have his face on camera, but loves to have his voice on camera, or something like that. Hello, AJ. How you doing?
Hi, Randy. Thanks for having me.
For those of you who don't know who AJ is, he is in the investment world. He's in the banking world, has been for I think something over 30 years. Is that right, AJ?
Yes, so I worked on Wall Street for basically almost 20 years, but my investing career started before that even. I've been an investor for over 25 years, approaching 30 years.
Okay, all right. And everybody knows, or with the people that know AJ well, it's because they follow him, subscribe to him on X, where he gives massively in-depth analyses of not only Tesla, but a number of other high-profile, mostly tech companies, and also does very in-depth profiles of the competitors to Tesla. And so I thought where we'd start this morning, AJ, is you had made a post yesterday, which was kind of interesting to me because on my channel, one of the things I talk about is that we hardly ever talk about the competition. Now, there's two reasons. Number one, that's kind of been my philosophy in my whole career running companies is I didn't really care that much about the competition. I know Elon talks about not caring about the competition. Do your job right, do it the best you can, get your best possible product out there. Now, does that mean I don't pay any attention? Of course not. I certainly want to know what their products are and, you know, uh, make sure that I understand what their uh, how they're contributing to the economy that I happen to be in. But you took the other side yesterday, and you said it's very important to understand the competition. So love to hear your philosophy.
Thanks. So fundamentally, I mean, you can see the importance of analyzing competition by looking at Tesla's margin development. I mean, everybody who follows Tesla knows that margin have decreased substantially from the 2022 highs. And a major reason was that competition was hitting the market. I mean, the competition literally flooded the market with competitive, not the competitive products is the wrong term, but with new products. And even though and this is why a big share of the communities kind of ignored them. They looked inferior, but they still managed to steal quite a few sales from Tesla, which then in return forced Tesla to lower prices, which then eroded margins. So for that simple reason, even if the competitor's product isn't that great, you still need to look at it because what the competition does to contain losses, as long as they have a positive gross margin, they will sell their product at super thin margins. And in some cases, because they try to utilize the factories and for other reasons to meet subsidy requirements in terms of employment, etc. There's a lot of detail to this and depends on the market. What the competition did, they sold vehicles that would typically retail at $60,000 in some countries. At the end, they sold them for 25. And of course, a person who is not totally into Tesla and is, let's call it, brand open, and looks at, let's say, it's something like a Mercedes, and looks at it, oh, this vehicle used to cost 60K, and now the dealer tells me, oh, I can have it for 30,000 plus extras. And of course, I will take the deal. Some people will think like that, and this is a lost sale to Tesla, and because a lot of brands did this across many different form factors, just the mass of all this new competition products eroded Tesla's margin, and in particular in China, where and I mean, Randy, this competition is extremely fierce, and so this also forced Tesla to lower prices, and so we saw price reductions across the board, and and that's why it's just factually correct that the competition had an impact on the financial performance, and hence you cannot just look at the company, you also need to look at the market environment. It's crucially important in my mind, because if Tesla was in a vacuum, there would be nobody else. Great, just grow, keep selling at your high margin, everything is fine, but it's just not the reality. Yeah, I stop here.
Okay, and then for what your approach is, you look at the financials of these companies, not so much the products themselves. Other people do that
Um,
very, very nicely. They look at the products, make the comparisons on the products in
uh,
terms of performance, in
mm,
terms of the features, benefits, etc. And then you look at the economic side.
Actually, I do both,
Okay.
but in terms of my output that is shared on X and to a very small degree on YouTube, most of that I don't share because it's too much detail. Because often, what I do quite frequently, I'm in a lucky position. I live not far from places where you have access to the latest vehicles of most brands, and so I quite frequently go there when I know there are new products, and I just look at them, and after several years, your neural net on checking cars out is trained, and you can assess the car very quickly. And so I always look at the product because ultimately the financial success of any automaker starts with the product. And when they launch a new product, I want to know whether this is a product that could be dangerous or not. And typically all I need to do is I need to look at the car for a maximum 5 minutes, and I need to see the specs and the price, and I can tell you whether this is a threat or not. And I have a very high hit rate with that approach. But I still look at the products, but unfortunately, at least in Europe and in North America, there's not much interesting stuff coming up. China is a different story. There are highly competitive products in various respects, and so that the auto competition, the pure auto competition, is extremely fierce, and there are some close followers. But when it comes to big picture kind of Tesla investing, you can't be investing in Tesla for the auto business. It just doesn't work at the above 1 trillion valuation. That's the bottom line. So I do look at both, and the other important aspect I'd like to mention in terms of analyzing a company and its competition is one that is, I think, doesn't get enough attention, and that is when, for example, a company you like, you invest in this case, Tesla, if let's say margins come down, and you might look at this, oh, it is negative, blah, blah. In fact, it's only negative if the competition doesn't see the same margin erosion and issues, etc. And it's for example, I'm making up numbers. Let's say Tesla's margin drops from 15% to 10%, but what if the competition's margin drops from, let's say, 14% to -1?
Right.
Well, Tesla did actually phenomenally well in that scenario. And so you always need to consider financials in context of the industry, what's happening. Otherwise, you're really flying blind and just looking at Tesla's performance and not really discussing the rest of the industry. I think is highly, highly short-sighted.
All right. So if you were just for fun, because I didn't realize that you did so much of the product analysis in addition to the financial analysis, combining both. If you were picking winners and losers right now, I have my list of who I think is competitive. I tend to look at the South Koreans, and then, of course, BYD, Xpeng. Who are the ones you're looking at right now who you think are at the top of the pack?
Given the exceptional growth, you have to put BYD quite high up on the list. That I think is an obvious one. And also, Geely is the other one that is very high up. One that is kind of a newcomer and maybe left field to a lot of people is Xiaomi. Xiaomi's first product launched in April of last year. That is quite new in the market and has done phenomenally well. And and given that the product has now seen or is soon approaching its first full year of sales, um, and looking at the numbers, this is a formidable new competitor. They have done all things really right, and currently they're only selling in the Model 3 category, which is not the most popular category, but they're really killing it in that segment. And they're about to launch their SUV product, which is positioned slightly above the Model Y. Um, I'm not sure this is the right strategy. They probably did it because the Model Y and especially the segment slightly below the Model Y in China is extremely crowded, and I think because you want to come in at a slight premium, I think this is why they did it. So the big thing to watch out for in 2025 China auto market is really how that vehicle does. So this would be like my top contenders, just based on the product performance. The products are quite good, and how especially the rate of innovation is quite high. That's also something I look at, and yeah, there's a lot of moving pieces right now. And then of course when it comes to Tesla is kind of in this transition stage where they're kind of taking sort of leaving sort of the pure auto business is transitioning into a transportation provider, and this is kind of my big problem right now because I'm supposed to make a reasonable forecast for 1Q and also of course for 2025, and this is why I deeply struggle with right now, and I never struggle as much as I do right now, because on the one hand there is what management said,
Yeah.
and there is the obvious interpretation of what management said. And I just recap so everybody's on the same page. Management said in H1 2025, and right now it's February, Tesla launches lower cost vehicles, plural, and and so this is what management said. And this is and the obvious interpretation is okay, they're launching new vehicles in H1, right? But I think, and this is a very contrarian view as far as I can tell, this is maybe not actually what happens. I personally think that the low-cost vehicle is the Cybercab, as I famously stated quite often on X already. And the reason why I think so is because we still haven't seen any leaks. There isn't also a good signal from the supply chain, and but in all prior product launches, there was at least one material leak several months ahead, and it's just not feasible to launch a new platform supposedly without any meaningful road testing. And so anyways, bottom line is if we don't see any leaks in this month, February, it's either impossible to meet the launch deadline, or there is simply no new vehicle, and it's the Cybercab. Because when I look at all the drone footage, etc., of Giga Texas, there's plenty of vehicle testing, but it's not another vehicle. It's the freaking Cybercab. So this is why it's kind of obvious to me that this must be the low cost vehicle, because technically, and this happened many times in Tesla's history, Elon or some other executive that said something, and people just ran away with the statement and took it on face value, but they didn't try to decipher like the potential other interpretation. And and when you read the guidance of the management, and they talk about, first of all, plural vehicles, that doesn't mean they all launch in H1.
Mhm.
It
Right.
could mean that one launches in H1 and then sometime later another one. So keep that in mind. The other thing is low cost vehicle. The Cybercab is a low cost vehicle. So even that part of this of the guidance is met. And the vehicle, when you look at the Cybercab, there a lot of pictures exist already. You can see this is a very simple vehicle, and is really trimmed down to the bare minimum, not in a bad way, in a good way. It makes manufacturing very simple, etc. And something like flexible production lines, they've been around for a long time, and pretty much every automaker is using them. So I think you can easily make a Cybercab with probably limited modifications on existing lines. So even the guidance where the lower cost vehicle can be made on existing lines is can likely be met. On top of that, Tesla builds in the, I think on the second level, like a new production lines. A lot of equipment is being put into this area of the huge factory. So it's possible because the vehicle is so simple. They have like a compact production line up there for initial production before very large volume production launches in 2026. So long story short, I need to see some spy shots of some other vehicle being tested that is clearly a Tesla. Otherwise, I cannot believe we see something other than the Cybercab launch in H1. I know I'm getting quite long, but I wanted to add one very important other point. Elon said last year that the internal deadline for FSD reaching like Robotaxi quality is mid 2025.
Mhm.
And I, for me, it's completely illogical to say, okay, if it's done in H1 2025, why would you launch the Cybercab only in 2026?
Right.
Why is there a 1 year delay? This makes completely no sense, especially taking into consideration the Elon mindset, faster is better, etc. He's not going to sit on his hand for 1 year if he has like a working FSD. So hence, if I add all these breadcrumbs together, all points to a launch in a few months of the Cybercab. And so the only big question where I'm still torn is, will it have a steering wheel? And we famously saw a couple of weeks ago, there was a shot from a drone where you could see that there was a Cybercab with a steering wheel. There's a lot of speculation where this was added for, engineering, etc. I don't think so. And I think this might be kind of a backup in case the software isn't quite there yet. And so they start selling these products, which I'm sure, I know a lot of people say it's not going to sell. It's a two-seater. Don't think about this like a 10-year product. It just needs to sell for a few quarters to iron out the kinks in the software, and it's going to be Robotaxi. So it doesn't have to sell for a year, it just has to sell for a few quarters, and it's way enough. And for that, there's plenty of demand. And so that is not an argument. And so the long story short, I just see it. I just don't see the other vehicle coming, and that's the big problem because I need to make a forecast and I need to factor in the management guidance, obviously. And I always try to stick as closely as possible to management guidance. But right now, I have like two fundamentally different interpretations of what management guidance could mean. I stop here.
Okay, so we've already had quite a robust debate about your proposal that Cybercab was the Model Q, or however you want to see
Yeah.
that. Brian White and I discussed that on Monday night, and Brian was adamant that this was not the case. So. Are you saying that the Cybercab or a two-seater uh, product with the shape and design of the Cybercab that we've seen comes out sometime in the first half and is for sale as a regular vehicle, something that that I can buy and start taking to the grocery store? And is there then a separate actual Cybercab without a steering wheel that comes out in June for use in the Austin market as which is just announced a few days ago? Are we looking at two vehicles, one with a steering wheel and one without? I mean, how do you see all that?
Yeah. I think it really all depends on FSD progress. I mean, if we just step back, we saw a massive improvement in version 13.2, and that was about 10 weeks ago. Release was about 10 weeks ago, if I'm not mistaken. And that release came about roughly 20 weeks after the prior big step. So Tesla took its time to polish that release, and it was a massive step forward. And we did, as far as I can tell, not see the two-step forward, one-step backward situation that plagued the prior releases. And and you could and then people who started using it even a lot of highly skeptical people started to change their mind. So this was really blowing everyone's mind, and it was part of why the stock rallied so much and why we saw all these analyst price target upgrades. But keep in mind, this was still in a period where the massive compute increase just came online. So the prior release couldn't take advantage for a long time, because ultimately you have to think about AI compute as the area under the curve of the compute scale,
Right.
not the curve itself. And because if you think mathematically, the x-axis, the abscissa, it was very short, and that's why the area was very small, even though the compute increased a lot. But now with 10 more weeks under the belt at the much higher level of the curve, there's a much greater area under the compute in the compute area. So long story short, to become not too abstract here, not my intention. So Tesla was able to put a lot more compute into the current unrevealed version of FSD, and when you look at the notes that they shared last time, where they also talked about the upcoming features. Um, I'm not going to repeat all of them right now. There's some features that are critically important. For example, the next version will have a longer window. It can think about certain situations,
Mhm.
and that will make massive input. It happened that my wife is actually AI researcher, so there's a lot of pillow talk about this. So I learn a lot from her. So it's a long story short, there's a lot of good stuff coming, which predictably improve performance.
Hmm.
And so I'm very excited about the next version. And given what Elon said, mid 2025 internal deadline and the massive increase in compute, which came online slightly ahead of schedule, as far as I remember, this all looks very positive, and that's why I'm quite optimistic that we might actually see this year the Robotaxi, and once it works, even if it works just sufficiently, in Austin and maybe a greater Texas area and some areas in California, this is all it's needed, because what you need in the beginning very quickly, you need like a network effect, because it's nice to have robotaxis, but if you look at your app and you try to book one, and it takes like 20 minutes for it to come because it's on the other side of the town, or it's always booked when you look it up, there's none available, it's just not great. So you want to create network effects. That's why you need to achieve local saturation of a ride-hailing market quickly, and that's why even a relatively small place like Austin can absorb a lot of product, and then you move on. And so long story short, if software progress is strong, and you can send out in certain areas the first robo taxis, it makes no sense to sell the vehicle with steering wheel, etc. You just keep focusing on the software, and you focus on penetrating additional markets. That's, I think, is the superior strategy.
Okay. All right. So you're looking at two vehicles because there's a fair amount of difference in what you have to do to a vehicle to put the pedals
Yeah.
and the steering wheel, and
Yeah,
you really
100%,
yeah.
100%. And the way I look at it, it's really just a backup in case the software has some issues, and it isn't ready on time.
Uh-huh.
That's the way I look at it.
Okay. All right. Very interesting. We'll see what happens with that one. So I can
Yeah,
understand why that
yeah,
makes it really hard for you to make some predictions
yeah. This
the
is
rest of the
very
year. Of
difficult.
course, and of course, the second part that makes it hard to make predictions is we don't absolutely know what Tesla's strategy is in terms of producing cybercabs themselves over the next 6 months, or well, the 6 months, second 6 months of the year, second half. We don't know if they're planning to make a lot of them. We don't know when it will be possible to add the Airbnb, quote unquote, Airbnb portion of the business, or how fast it'll roll out. So the figuring out the actual income from fleet, Tesla fleet vehicles, as well as the possible income from Airbnb type vehicles is kind of hard to make a judgment on that right now.
Um, okay, I can't go into detail, unfortunately, but there is some signal from the supply chain. Of course, Tesla is a global supply chain. The tens of thousands of people are involved, so leaks are obvious. There
Yeah.
is some signal there that there is some some expectation of volume increase.
Okay.
I can't go into the detail, but there is some expectation of volume increase, and there is one component that is new. And anyways, I already said too much, but the bottom line is there is some positive demand signal, so they will be making some, but the real signal is in 2026. Basic exact, and I'm basically not telling you anything new because Elon said 2025 will be a transitional year and 2026 will be epic. And this lines up with some data that you can retrieve in the supply chain. And so anyways, so this is I consider public information already.
Okay.
And
Okay.
so if we add this together, I think it also lines up with what Elon said in terms of the rollout, because you want to do it in a very safe manner, even if you know have a slower rollout in the beginning, because of course these are even the Cybercab will be probably just under 1 ton or almost 1 ton. It's relatively light by vehicle standard, but still, if it makes a mistake and runs someone over, God forbid, um, you can imagine headlines. So Elon, of course, and the entire team is painfully aware of that, and they will make sure it's going to be super safe. And that's why I think they will plan for a slow rollout, because you want to introduce it in a new market, and every market, and market I mean cities, have different specificities, and you need to make sure everything's safe and sound,
Sure.
and then you move on. Basically similar to, for example, how Waymo did it. Waymo is, like, of course, a completely different system, but in
Right.
terms of rollout, we can take some lessons of what they have done. And so this is probably what's going to happen. Is also exactly what Elon just told us a couple of weeks ago on the earnings call. It makes all complete sense. So I mean, I'm not thinking there will be several hundred thousands of cybercabs by year end. There will be some material number, but it's not gonna be. It's not like 50% year on year growth in 2025. Not at all. Yeah.
Yeah.
And,
Yeah.
but then there's obviously the other big question: what can you do with non cybercab
Right.
robotaxis, aka Model 3, Model
Right.
Y?
Right. Yeah. So you see a material contribution to revenues and profits from.
Um, that's a different story, because rolling out cybercabs, and I recently shared some analysis that demonstrates how I think about that. Um, you so the numbers I worked out, and so basically the way you should think about Robotaxi, or not how you should think about it, but one way how you can, I think, better visualize what Robotaxis mean if you compare it to just vehicle sales. Because a vehicle sale is something I think most people intuitively understand, but how does this compare to a Robotaxi? I think is a more difficult thing. And so what I thought you can do is you just look at, okay, what's the contribution of a sale versus a Robotaxi in terms of gross profit, because
Right.
that's ultimately um, a key, basically the key metric when you want to compare these things. And what I found was that if a cybercab is up and running for an entire quarter, it probably, and of course I had to use some important assumptions here, but I tried to use as many as Elon provided.
Right.
So I used Elon's assumptions as much as I could. So I worked out that one cybercab could probably produce around $2,300 in gross profit in a single quarter. And okay, so another question is, okay, how does this compare to a vehicle sale? In the fourth quarter, on average, globally, I have to point out, a Tesla generated, from memory, around about 6.6K, so $6,600, which basically, at first glance, you might think, oh, why is there so little profit in Cybercab? Well, when you sell a vehicle, you get basically all the gross profit up front, quarter one. But the Cybercab is not only providing for 1 quarter gross profit, it then keeps producing until you have to, uh, uh, scrap it because it's too old. And the question is, how long can you run a Cybercab? But I estimate you probably can easily run it for 4 years with some degree of maintenance, which is already reflected in 2.3K of gross profit. So long story short, about a year, the latest, a Cybercab is massively more profitable than a vehicle sale. And then when you consider that instead of producing one time in one quarter gross profit, in the case of a vehicle sale, the Cybercab produces probably, if you assume a 4 year lifespan, at least 16 quarter long gross profit, you start to realize, oh, there's a massive delta. So when you then run the numbers, you come to the realization that one Cybercab is likely 5 to 6 times more lucrative than a vehicle sale. And and then you can run some bigger picture numbers. So if you sell, or if you can operate 1 million cybercabs after a certain number of years, that's the equivalent of selling 8 million vehicles. And right now, the largest automakers in the world, they are just, for example, Toyota, they're just selling like around about 10 million vehicles. But I can tell you their gross profit is nowhere near 6.6 billions. So you start to see these big numbers emerge. And it's very interesting. But the bottom line is really, you should not expect a huge earnings uplift in 2025. This is, I think, too far-fetched, because the Robotaxi, whether it comes in Cybercab form or Model 3 or Model Y form, is delayed because the revenue emerges over time. Although I think my analyst colleagues will look through that, and they will account for that, because what encouraged me recently was when I saw all these updates, they started to think a little more long term on that point, and so that makes me optimistic that once we see actual first paid rides, that they will kind of open up the aperture a bit, and will account for that. So they will be very bullish, I expect. And but the problem is the multiple at the current price, and especially if the stock goes up, will remain quite high for the rest of the year. That will expose the stock to heightened volatility. So just make sure you don't have too much leverage. But 2026 looks really good, and you have to keep in mind the stock year end 2025 will be driven by the earnings generation that is incoming in 2026. It's
Right.
always the
Right.
big point to keep in mind. Yeah.
Right. Okay, so that was a very interesting thing, because you are an order of magnitude lower in profit than pretty much everybody else for the Cybercab. So whether it's Kathy Wood, whether it's me, whether it's others who have done the analysis, we've been coming in with a number that I would say was on the order of 40,000 a year in profit. Uh, uh,
Um,
even
yeah.
Kathy Wood, when she gets down to 50-cent rides, much less in the beginning, I'm assuming that rides will be $1.50, $2,
Yeah.
2.50.
Yeah.
So
I, I just I
how
just would like to point out that her returns are a fraction of my returns in the capital markets. As a little side
okay,
note.
all right, okay.
Yeah.
All right, that's
Yeah.
fine. That's fine. But my returns are much higher than I'm kidding. What what would you say is the big difference between those? Because there's not just me and her. There's a whole bunch of
Yeah, yeah,
people
yeah, of course.
who are at
But I
around
think,
40,000. What's the big
yeah.
difference?
So first of all, like the number I put out, it's not like number out of thin air. As you know, Randy, I always put down all the detailed
Sure.
calculations. I put down all the granular assumptions. So literally everybody can look at my, X profile, pull up the post, and can work through it, and they can arrive to the same
Oh,
number. They will arrive at the same number if they believe in the same assumptions.
mhm.
And because I disclose everything, you can check where you agree or disagree with me. I do this, I do the things on a very bottom-up basis. I think through all the cost components, and I think about how this is being accounted for in financial accounting and how this flows through the P&L and things like that. And this is how I arrive at my numbers. And but of course, I'm also making some important caveats. For example, and I'm not exactly sure whether this was included in your or Kathy Wood's estimates. I have not included any second use revenue. Second use revenue is the fact it comes from the fact that this potentially huge fleet of robotaxis mostly sits around at night. And there's a strong argument that this very same fleet, just as we see in the airline industry, can be used at night to basically deliver parcels and
Right.
move physical goods around. And because it would be a very low, because you have an existing fleet, basically you already paid for all the hardware.
Right.
So the incremental cost is really just the running cost, which
Sure.
is minuscule. As my analysis showed, the vehicle cost itself is the big cost driver per mile, not the electricity, etc.
Mhm.
And so there's an obvious business case there, which I have not included at all. And the good example I always use is like the airliners, passenger airliners. A lot of people don't realize that a lot of the airliners, with all the seats and everything, they're being used as cargo planes at night. And what the airlines do, they put some seat protectors over the seats, and then they stuff the entire plane full with parcels,
Yes.
literally, and use them as cargo planes because,
Yeah.
again, the same
Yeah.
argument. It's only
Yeah.
the fuel cost and a little bit of personnel expenses and some maintenance that you spend, and makes it highly lucrative. Anyways, long story short, there's a lot more upside, but you always want to be a little bit conservative on the things, because as I mentioned, I think on our last video, as an investor, you're rarely rewarded with being over optimistic.
Right. Right.
And the downside is typically limited when you're slightly conservative. Yeah.
Okay. All right. Okay. That now that I have a homework assignment, I don't know how I missed your analysis on the income from the RoboCab, but or CyberCab, but I'll definitely be checking that out later today. All right. Let's take the opportunity to switch over to the first quarter. How are you seeing? I know I've seen your
Yeah.
your volume number at
Yeah. Yeah.
425, I believe.
Yeah, yeah. So the 425. So how did I arrive at that? So the 420. So the big assumption is that Tesla can sell every Model Y they can make in 1Q, except for the roughly last 2 weeks worth of production, because they simply can't get to the customer on
Right.
time and transfer it. So I cut that production out. I assume a relatively smooth 2 week spool up to not crazy production rate, but to rates that we have seen previously.
Okay.
And so I assume this globally. It's an important point. We know Shanghai is very good. We know from Lars Morani, he said in 2 weeks, the switch over from the old Model 3 to the new Model 3 was done, and the rate was up again. So they did it before, and I don't see why they can't do it again with all the learnings from before. So that's why this might hopefully be not too optimistic. And so basically, by applying this logic, they can sell everything they can produce. They can spool up to previous high production rates relatively quickly in 2 weeks, and they can keep it for a few weeks. And then there's another big assumption. The other big assumption is that, for example, right now in China, Tesla is not allowed to sell a new vehicle because they have not yet received a license. This is widely considered just a formality, and receiving a license from introduction takes typically around 50 to 60 days, which places us right at the beginning of March, just as Tesla announced. Tesla said deliveries will begin, they expect, from early March. And this is also basing my expectation. So what I'm assuming, Tesla is already pre-producing these vehicles. So basically all of February, they're already producing. And and we have seen in early February there were already some car carriers shipping some Model Ys. This seems to be on track, but these are all big assumptions I'm making. And and basically, I'm assuming imminent start also in California, and then also in Europe, in Berlin. So but again, but the thing here is to keep in mind, this has never happened before. Tesla has
Right.
never before switched production of a major product simultaneously in globally. Tesla always did it in stages for various good reasons. But anyway, so there's a risk associated with my forecast, obviously, but they could hit it if everything goes well. So I expect a huge delivery wave in March.
Hmm.
February will still be quite low in most markets, and the China low might actually be February.
Right.
Um, and uh, and then another thing I didn't realize when I put up my 425 number was that Tesla was actually still making Model Ys in the US.
Yeah.
So I thought when they launched it, this was it. They would just be selling off,
Right.
inventory at this point, and but you would not see new vehicles rolling out of the factory. This was false. So I have to think about this, how this affects my forecast plus what we see, because if we barely see any product waiting in China, it might, for some reason, they might not be able to pre-produce. I don't know. I'm just making stuff up here,
Right. Right.
but this is another touch point, something I will be monitoring, but we should see there. But basically, you should see on Chinese social media some pictures of big parking lots where you see a ton of new Model Ys.
Right.
Otherwise, it just doesn't add up, because you cannot park, 10,000 plus vehicles
Right.
in Shanghai in the factory. Physically, I mean, you must, these vehicles must show up somewhere.
Somewhere.
So
Yeah.
if this doesn't happen, if I can't feel, I luckily can read Chinese, so I often observe, Chinese social media, and so far I haven't seen it. I've seen some small stuff, but that doesn't add up. So in the next couple of weeks, we should be seeing some first shots. It always happened before, but anyways, so there are a lot of uncertainties here. But the big picture is, even if, like, we see like a really disappointing number, I think a really disappointing number would be sub 350,000,
That
um,
would be disappointing.
below below 300 would be, of course,
Crazy.
it would be crazy low. I mean, again, I'm not expecting it. I'm just putting out
Right.
some
Right.
rough.
Right. 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 Right.
Although, if that happens, of course, we will see a reaction. But the point is, at that point, towards the end of March, we will see weekly registration numbers
Right.
in China. And as long as these numbers are very strong, if the global total for Q1 isn't that great because of the transition,
Mhm.
I think everyone with a brain will not understand that, okay, they couldn't sell the vehicle for a while in the main markets, hence customers simply couldn't get the product.
Right.
Towards the end of the quarter, we saw great sales, so it's going to continue into the next quarter. So this is just a short blip on the radar, so nothing to worry about. So this is probably, if the share tanks, probably a huge buying opportunity, because when you look at the new Model Y, and that's why I love to review the product. So I have not been able to sit in one yet, but I will do so actually tomorrow.
Okay.
And for the first time, but just by analyzing pictures and also reading lots of comments, etc., I think that they have yet again a winner.
Oh yeah.
And um and I can't wait to test, like, the improvements on sound, insulation, etc., yada
Right.
yada yada, and
Right.
the drive comfort. And yeah, and we know the software is the best, still the best. Yeah.
All right. So I've been making some assumptions that I don't think maybe you have too, but other people haven't been making, which is that the real potential for energy before Shanghai was 14,000 gigawatt hours per month. That's the potential. That combines the power walls, which they gave us new numbers yesterday, so they're making way more power walls than they were making. But my numbers were around 14,000 gigawatt would be if everything got shipped and if everything got if the bookkeeping, if the financial recognition took place on 100%, we would be at around 14,000. Well, we've never hit a 14,000 month. So I've been thinking that at some point, the kind of wave of
Yeah, I know what
bookkeeping
you mean.
aspect would give us a month above 14,000. How are you looking at that?
So first of all, to avoid comments in the video or under the video, I think you're talking about a megawatt.
I said, I'm sorry. Okay.
Yeah, and but no worries.
Always like
I often mix them up too. And so the problem is the megapack business has reached such a scale that I simply don't see the Powerwall business right now to offset the volatility that we see. Also so just to bring everybody on the same page. So what happened is we saw in 2Q25 this huge spike in energy deployments and all-time high. Then it pulled back in 3Q, and then it spiked to a yet again new all-time high in the fourth quarter. So the question now is in 1Q, are we going to see a pullback again, or will we see yet again another all-time high or a level similar to the all-time high? That's basically what it comes down to.
right.
And based on historic patterns, plus commentary from the CFO, plus what I observed in the inventory movements in Tesla's accounts, unfortunately, I have to conclude that 1Q will likely see a sequential decrease. How much? Not sure.
Mhm.
Probably, if you look at the relative sequential change, not absolute relative change of the prior quarters, that gives you a pretty good guide. I did this in the prior quarter, and that enabled me to nail it.
Mm.
Maybe it was a fluke,
Mhm.
but if you're lost for any way to model this approach you could take. But long story short, based on these three things I just mentioned, unfortunately, when I model like my 1Q EPS, I will assume a slight pullback. But again, this is all just, super short-term stuff, and I guess just seasonality and just for everybody who's not sure why you have these periodic drops.
Oh,
It has
let's not go through that again. My
oh,
my
okay,
my
we
crowd
skipped that
my
part.
crowd
Okay,
gets that. So
yeah.
then do you make any assumption that the actual production is fully at the 10,000 per or 2,500 units per month on the mega packs, or do you think maybe they're not hitting those numbers?
Um, to be honest with you, I don't even look at it
Okay.
because the mega packs, first of all, they're exceptionally hard to track.
Okay.
You know, probably notice, Randy, there are all these mega pack, these energy storage project trackers around on the internet. And I think overall they do a good job tracking these projects. But what I did is I basically took their data and I looked at, okay, how can I correlate this with actually it's deployments, because ultimately this is what everybody wants to know. Nobody wants to
Yeah.
look at a megapack tracker if you can't use it for forecasting.
Right.
So what I try to work out, is there any predictive quality in the data hidden? And unfortunately, I could not work out anything that would have given me, in
Yeah.
retrospect,
Yeah.
a good steer for what was about to be reported. By far, the best steer was provided by the CFO. You just need to be very careful what he says and take this into consideration. This was by far over at least the last three quarters the main guide.
Right.
Even the 2Q breakout quarter, based on his commentary, was kind of predictable. So for the last three quarters, this was like gold. And that's why I would still refer back to him. And all this other stuff, I know there's production and blah blah blah, but again, if you try to do the back testing, like you always have to avoid the Monday morning quarterback syndrome.
Right.
Oh, oh, they produced so much, but you learned it after the, the release of the numbers. So it's not knowledge you can use. So if you try to do some real back testing with knowledge of before it was released, was this a good steer or not? And the
Right.
problem is when you look at production rates, because of the stupid accounting we're not going to get into of the project, the energy project, um, it's not a good predictor, and that's why I just keep it simple, and I just listen very careful what the management tells me, and try to come up with a reasonable estimate by looking at historical trends and things like that. And for the last 3 quarters, I was quite accurate by using this very simple approach.
Okay. All
I,
right.
I'm not afraid. I'm not afraid of using a production rate. It's just
Yeah.
that
You don't have
you
it.
always have
Yeah.
to
Yeah.
you should never get married to your methodology. I
Right.
always told this my analysts. I train a lot of analysts in my career, and I always told them, okay, if your approach is not producing a stable multiple or whatever, throw it overboard, start from scratch.
All right. Well, so we're running out of time. So there's two really big questions that everybody's just sitting there waiting for you to answer. Number one, what is your EP, your earnings per share estimate, your EPS for first quarter?
Yeah, so huge disappointment here. I can't tell you yet, because
Oh,
it
you
goes
can't
back.
tell me. Oh,
I can't tell you yet because I honestly don't have one.
okay.
Because I'm so yes, of course I could um, work out on. I mean, of course I could work one out, but I'm right now I'm thinking about a lot of other stuff, so it's simply not huge priority to me right now. That this
Is there
is
is there a range?
um I mean, I could only guess because I honestly haven't
Okay.
run the
All right.
numbers
Okay. All right.
through my model, and because the thing is, it's, and I said this a couple of weeks ago, this is by far the
The
most
toughest. Yeah.
difficult quarter to forecast in a long time,
Yeah.
and the reason has to do with the main, of course, with the Model Y, and because there are two main effects. That every quarter thus far were the main drivers, was basically the average selling price of the vehicles
Yeah.
and the volume.
Yeah.
And there's right now a huge uncertainty around the
Right.
volume. How many can they get actually into the
Out the
hands of
door.
the
Yeah. Yeah.
customer?
Yeah. Yeah.
Plus, we have the pricing increase on the the launch edition Model Y.
Right.
And but then there's another layer. The other layer is then the cost layer, which
Right.
is the third big driver. And because you have the transition to the
Yes.
new product, you have certain underutilization of equipment. This has effects on the depreciation charge and a whole
Sure.
host of other things. And that's why I can't tell you the exact number, but the dynamics are probably you have a decrease in volume, you
Mhm.
have an increase in average selling price, so that's highly positive. But then you have also an offsetting effect of increasing cost. It's
Right.
highly unreasonable to assume that the cost will drop further sequentially as you switch to a new product.
Right.
So long story short, but I don't expect like a stellar quarter, no way. But the big question is, does it really matter?
Yeah.
And and when you look, and this is very important, very important. It's the most important thing we probably discuss in this video. The important thing is look at the 4Q reaction to the stock. It actually moved up.
Up.
When Tesla released the numbers in the first few seconds, the stock dropped. Why? Because the algorithms read the print and they saw that the numbers were not good objectively.
Right.
Across the board, margins came down. It was not
Right.
a good print
Right.
because it was just extremely competitive quarter. But quickly after this algorithmic reaction, the stock traded up because the market started to look past just the operational performance and to the future, to the AI autonomy future.
Mhm.
And 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 if this worked in 4Q and after 1Q, and keep in mind, this will be early April will be the real release of the volume, and the
Right.
numbers will be released in late April.
Sure.
We will be even closer to this autonomy future. So I'm not sure, even if the the EPS is shockingly bad, let's say it's less than half, like like 30 cents or less than that, or even slightly. Okay, let's not talk about loss making, which I don't expect, but let's say it's very, very low. Um, Outside a short-term reaction, I'm not sure if it mattered that much. And now the critics will basically shout in front of the screens and say, "Oh, but AJ, you're an idiot." Right after the bad earnings print, the stocks sold off. But please keep in mind, um, there was huge uncertainty. First of all, the Doge kicked in. Elon was front and center and got unbelievable new levels of hatred. And plus, there was obviously a lot of political stuff going on, the tariffs, like some people talking about taking Greenland over, making Canada the next state, and you have to keep in mind everything will happen. A lot of stuff happened. The call is not wasn't long ago, but a lot of stuff happened. So all this stuff happened, and then the DeepSeek hysteria
Yeah.
created AI uncertainty. Look, there were so many things, and it's always important that you remember what happened, so you cannot, so you have a good mental template of what happened. Because if you don't remind yourself of what actually happened, you take the wrong lesson away from events that happen, and that's why. And then you can't learn from these events. That's what I always tell people, keep in mind what happened, try to create a strong memory, or sort of a strong log of what happened in the TSLA history, and it will help you greatly in the future, and you can make a lot of money from it.
Yeah, okay. Well, and we certainly have that's what we do every day on this channel, of course, is we try to keep that memory as well as make some kind of wise analysis of what happened on any given day and any given week. In general, are you looking for a pretty good year, or are you looking for another kind of transitional year?
The way I would describe it, 2025 is back end loaded. I have very low expectations, and I think there's pretty much consensus for first quarter. It's just product transition, but it's obvious. And then there will be a crazy sequential. So sequential means quarter on quarter, sequential increase in the second quarter, because 1Q will be very low, but this will make 2Q look super strong. And I know for close observers, this sounds like ridiculous observation, but the reality is there is a large unsophisticated part of the market, and they actually respond to such news, even though it's like painfully obvious to
Right.
people like us. But history taught me, do not underestimate the ignorance of the market. And and you can be the smartest investor in the world, but if you don't take this into consideration, you're misjudging the situation. But anyways, so there will be a massive improve in 2Q, and 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 then and then it gets really interesting, because in the third quarter, everything will be fully ramped, Model Y wise. Also, the first deliveries out of Shanghai will hit the customer. And more importantly, I mean, the first deliveries will hit the customer even in 1Q, potentially in Australia, latest in 2Q. And the revenue, certainly the first revenue from Shanghai Megapack factory will hit the books in 3Q. And that's exciting, because the Shanghai Megapack factory, and we won't go through all the details, but has access to the low-cost Chinese supply chain,
Right.
which will drive down the average cost, but so will be, sorry, the average price of the kilowatt deployed, but so will be the cost.
Right.
And so the margin could remain quite attractive. And then, of course, there is there's the Robotaxi, but the Robotaxi, even though I argue the direct financial impact will be limited in 2025, it doesn't matter, because the much bigger driver is the multiple. Because as people can see, potential software revenue coming in big amounts in 2026, this will affect the multiple. So even though the earnings impact is not that great, the other driver that drives the stock is the multiple.
Okay.
And this is where I see the main benefit in 2025 of even if just a limited release of the Robotaxi.
Gotcha. Gotcha. Yeah, of course, and unsupervised rides as
Yeah.
well. All right, AJ, I know you like to be able to get back to the market, and now in
Yeah, yeah,
California
yeah.
right now
So,
it's 6:36, yeah, so that means the market is open. So we need to let you go. Thank you as always for coming on. I can't wait someday to maybe see your face.
yeah, maybe someday. It just gives me peace of mind to stay anonymous. Because some of the things I report on, if you piss off the wrong person,
Oh
you might be in
no.
the trouble. And as long as I'm anonymous, I feel more at ease.
Gotcha. All right. AJ, thanks again. Thank you so much for coming on, and I hope you have a great day in the market.
Thank you. Take care.
All right. And to all of you out there, it's been great talking to you.